You were on the show 6 weeks ago, thereabouts, and I think that, should we just repeat the same answers you gave to the question as to where we are now?
We're no further ahead. No, I think the only thing that's changed...
Actually, do you think there's actually going to be a deal?
I think it's entirely possible there is no deal. They just keep talking, tariffs stay where they are, and we wait until after the next year's election. I think what's happened behind the scenes is what we thought in the beginning of October we would get was a quick deal. China buys more agricultural products. The U.S. agrees not to raise tariffs. And then in early next year, we get something a little bit more encompassing. Now, when they talk about phase one, it's that more encompassing deal. So the fact that we haven't had an agreement on phase one is not necessarily bad news.
But surely this, and this is the thing, I can repeat the questions, which is, this is meant to be the easy stuff, isn't it?
So we've gone, I think what's happened is we've gone beyond the easy stuff. The easy stuff, you buy more pork and soybeans, the U.S. doesn't raise tariff. Easy. The stuff on intellectual property rights and level playing field and foreign investment, the role of SOEs, that's the more difficult stuff, and that seems to be what they're talking about. And the Chinese then, well, if you want to talk about that, let's talk about how quickly the tariffs are going to come off. So it has got to the more complicated stuff that we thought they had postponed until the beginning of next year. So my base case is we don't necessarily get a deal, but I think the United States side doesn't want to raise tariffs, and as long as they're talking, tariffs will not go up.
So, Michael, what does that mean then in the context of the trade data that we got out of the weekend? What is your interpretation of that surprise drop in exports? Does the imports, as Rish was touching on earlier, does that suggest that maybe the domestic economy is stabilizing? And if you don't get tariffs rolled back, does that pressure just continue?
So the import data, there's big base effects in the data around now, right? Because last October we had another round of tariffs imposed. You would expect to see Chinese imports rebound before exports, so maybe that's what we're seeing. We've got positive growth in imports, strongest numbers since, I think, November last year. So maybe that's what we're seeing, but the export side, it's this creeping decline in export growth. I mean, it's hardly moving. If we're right, the tariffs are not going to go up from here for the next 12 months, that base effect on imports and exports is going to gradually unwind. By the end of next year, you're going to have, I think, significant sort of low positive growth in Chinese exports and imports.
Yeah, and you think that the Chinese economy could bottom out next year. How much of that is down to the changes in supply chains? How much of that is down to businesses just becoming better at weathering these headwinds?
Well, there's really two things. One is the distortion in the data that we get from the imposition of tariffs. That disappears from the data. So the fact is the U.S. economy has been growing over the last year. The European economy has been growing more slowly than they were a year and a half or two ago. So as the distortion from the tariffs disappears, export growth should rise. That's one source of just mechanically getting maybe a tenth out of GDP growth for China next year. The more important story is it's beginning to look like the Chinese consumer is starting to save a little bit less. Back in 2016-17, when you had this big property purchase boom, households took on a lot of debt, and they've spent the last 2 years saving a little bit more of their income to stabilize that, to accommodate the fact that they've got higher interest payments. It appears in the last few months they're starting to spend a little bit more of their income, which gives us a little bit more reason to expect a bit of positivity in the next few months.
So, Michael, very, very quickly here. So you had all the uncertainty thrown up by the trade war here, which, of course, delayed CapEx and investment.
Yep.
That, you see, the thing is that can't be delayed because of uncertainty forever.
Correct.
So do we actually then begin treating this as the normal conditions that we are operating in very quickly?
Yes. So the normal environment is global growth is still positive. It's a little bit weaker than it was a couple of years ago. And as the uncertainty around Brexit lifts and the uncertainty around the trade war lifts, I do think we could get a little bit of upside to global growth. So we're a little bit more positive on how the world's going to look over the next 2 or 3 quarters.